IREN stock continued its slide on Monday, closing at $60.17, down another $2.21, or roughly 3.5%. What makes this drop stand out is the fact that the broader market was green. Tech was green. AI names were green. Momentum stocks were green. But IREN kept falling. That raises the obvious question: what exactly is going on here? Why is the stock still selling off even though the mood across the market has turned positive? And more importantly, is this the breakdown that bears have been warning about, or is this the setup before the next leg of the run? Those are the questions investors are wrestling with right now, especially after such a dramatic couple of weeks. Just a few days ago, IREN was hitting new all-time highs. The Microsoft deal had sent the stock into orbit. Analysts were raising price targets. Social media was buzzing. Momentum traders were piling in. But since earnings, everything has reversed. The stock has now sold off for several sessions in a row, and the tone around the stock feels very different from the excitement we saw last week. To understand what's happening now, we need to zoom out and look at the bigger context. IREN didn't fall today because of new bad news or some kind of hidden development. Instead, what we're seeing is a continuation of a normal and predictable market process. When a stock goes parabolic, when it becomes the hot name, when it surges hundreds of percent in a short period of time, it builds up what I call emotional altitude. And emotional altitude is fragile. It doesn't take much to shake it loose. The higher a stock flies on momentum, the more sensitive it becomes to anything that challenges the narrative. Last week, that narrative faced its first real test when IREN released earnings. The numbers were good, but the details under the surface weren't perfect. Costs were rising. Depreciation accelerated. Share-based compensation grew. Capital expenditure requirements were higher. And the earnings call did not provide a tightly defined timeline for when the Microsoft deal will begin contributing to revenue or what those margins will look like. None of this breaks the long-term story. But for a stock priced for perfection, it was enough to trigger a re-rating. Since then, the stock hasn't been able to find a firm floor. And that leads us to today's move. Even though the general market was positive, IREN continued to drift lower. Why? Because the market is in the middle of unwinding the hype from the pre-earnings run. Stocks rarely unwind that kind of mania in a single session. Instead, it's usually a multi-day process. There's an initial sharp sell-off. Then a small bounce. Then more selling as traders who bought the hype start closing their positions. It's a cleansing process. It's uncomfortable. It's frustrating. But it's normal. Another factor weighing on IREN right now is that AI infrastructure stocks are still in a soft patch. This isn't obvious if you only look at broad indices, but if you watch the sector closely, everything from HPC builders to GPU supply chain names to data center expansion plays, many of these companies are still under pressure even on green market days. That's because this sector is uniquely sensitive to capital costs, to margin uncertainty, and to execution timelines. These companies have to spend huge amounts of money before they make huge amounts of money, and in the early stages of that spending cycle, sentiment can turn quickly. That sensitivity is amplified in IREN because the company is undergoing one of the biggest identity transformations in the entire tech landscape. It's shifting from a Bitcoin mining operation into a full-blown AI compute provider. That's a bold move. It's exciting. But it also means the market wants clarity at every step. Investors want to know how much the Microsoft deal will contribute. They want a clear roadmap for GPU deployment. They want visibility into the ramp. They want clarity about capital raises. They want certainty about margins. And right now, the company has not been able to provide all of that because the project is still in its early phase. Add to this the presence of high-profile criticism. Jim Chanos, one of the most well-known short sellers on the planet, has recently come out with a very sharp critique of the IREN story. Chanos argues that the Microsoft deal gives too much upside to Microsoft and leaves too much risk on IREN's side. He has said the company is relying on what he calls ridiculous assumptions and hopium, and that the projected returns might not justify the scale of the investment. When someone with Chanos' reputation speaks like that, investors listen. Now, does that mean Chanos is right? Not necessarily. But his voice adds caution to a market that was already jittery after earnings. He introduces doubt. And doubt spreads quickly when a stock is already sliding. Today's weakness is partly the market digesting the fact that there is now a credible bear case with a well-known name behind it. But here's the other side of the story. While Chanos gives the bear case, Eric Jackson gives the bull case. Jackson has been one of the strongest champions of IREN and believes the company is set up to become one of the key infrastructure providers of the AI era. He sees the Microsoft deal as a powerful validation. He believes the company's long-term potential could push the stock toward $90, $100, or even higher if execution continues. Jackson's thesis is built around the idea that AI compute demand is growing far faster than the ability of companies to supply it. And the companies that can deliver high-density, energy-efficient, high-performance infrastructure at scale will be the winners. Both of these viewpoints, Chanos and Jackson, are now shaping the way investors interpret every move IREN makes. And that's where today's video angle becomes so compelling. The stock is sitting in the middle of a narrative tug-of-war. Bears are saying the deal isn't financially strong enough. Bulls are saying the deal positions IREN to become a global AI compute powerhouse. And the market is trying to figure out which story will dominate. Now let's bring this back to today's action. Why did IREN fall while the market was up? Because this is the phase where the stock is searching for a floor. When a stock is in price discovery mode on the downside, it doesn't matter what the rest of the market is doing. It only cares about one thing: how much uncertainty still needs to be priced out. And right now, the stock is still trying to find that point where sellers exhaust themselves and buyers step back in with conviction. The real question is whether this decline is the breakdown bears have been waiting for, or the setup for the next leg higher. And the answer depends on what you believe about the next few months. If you think Chanos is right, that costs will continue to rise, that returns will be too low, that dilution will hurt shareholders, and that execution risk is too high, then you'll see this decline as the beginning of a longer downtrend. But if you think Jackson is right, that AI compute demand is exploding, that hyperscaler demand is outpacing supply, that IREN's infrastructure gives it a strategic advantage, and that the Microsoft deal is only the beginning, then this pullback becomes interesting. It becomes the first rational entry point in months. It becomes the moment where the hype is gone and only the fundamentals remain. It becomes the setup before the run. And that's the angle for tonight's video. Is this decline the breakdown, or is it the moment before the next move? The answer isn't obvious, which is exactly why this story is so compelling. We have a high-profile bear on one side, a high-profile bull on the other, record revenue on one side, rising costs on the other, a massive Microsoft deal on one side, execution questions on the other, and in the middle sits IREN, trying to find its true value in a market that's still trying to figure out what this company is going to be 3, 5, or 10 years from now. As we go into the week, these next few sessions will reveal a lot. If the stock finds support, holds it, and begins to stabilize, the long-term story gets stronger. If it breaks support and continues to slide, Chanos' warning gains weight. But either way, this is the moment where smart investors pay attention, not because they're guessing who's right, but because they're watching for clues about the future of one of the most interesting AI infrastructure names in the market right now.